Hi, everybody. Thanks so much for tuning in. We're going to recap SoFi's second quarter earnings that just dropped last night. So, before we do that, SoFi is a stock that has been terribly beaten down. It's down before today, it was down about 75% from its 52-week high. It was about 35% below where it was the first day it went public by a SPAC. And today it's up big, but let's talk about why the investors have been so pessimistic on the stock. One, SoFi is a pretty diverse financial company now, but their core business is student lending. They were started as a private student loan company. They do student loan refinancing. Obviously, with the pause in federal student loan interest and payments, there hasn't been much of a need for this lately, and it's still a big business. They have over 1 million private student loan borrowers. So the fact that that core business is kind of ground to a halt recently is kind of scaring investors, especially with no certainty in sight when it comes to student loan forgiveness. There's also obviously the recession risk that is generally a negative for banks. It reduces loan demand. Recessions can cause an uptick in loan defaults. SoFi is actually a bank now, so it has to worry about that. And it's just been a bad environment in the market for growth companies in general, especially unprofitable ones. SoFi is profitable on an adjusted basis, but not on a GAAP net income basis. They have a lot of stock-based compensation and other factors that cause a net loss every quarter, and that's kind of where SoFi is right now. Now, if it keeps growing where it is, profitability will come, but that's another story. So the market's been down on this stock. It's rallied almost 30% as I'm talking on the earnings news today. So what did investors like so much? Well, essentially, SoFi showed the market that yes, the student loan business is kind of paused right now, essentially, but investors don't need to care. SoFi added 450,000 new members in the second quarter alone. It increased its membership base by 69% year over year. Its members are getting more and more different products with the company. So they added 450,000 new members, but they added 702,000 new products, meaning that a lot of customers are getting more than one different financial product through the company. There's almost 2 million customers for its investment platform right now. There's are almost 1.94 million SoFi Money customers, which is its checking and savings account products. The credit card business is still in a relatively early stage. Personal lending, 715,000 personal loans they've made. Those aren't student loans, those are personal loans. And the company did better than analysts had expected. They beat their own revenue guidance for the quarter. They beat their own guidance on adjusted EBITDA profitability. And they've achieved adjusted profitability every quarter for the past 2 years, which that's not GAAP profitability. That's not bottom line net income. But that's definitely a start, especially for a company that's, like I said, growing their membership base 69% year over year. We can accept a little bit of a net loss for the time being, especially since SoFi has about $900 million of unrestricted cash and investments on its balance sheet already. So basically, SoFi just outperformed the market's expectations tremendously and also raised their forward guidance. They're expecting full year revenue um, a little higher than they were before, about $1.51 billion. They're expecting adjusted EBITDA profitability at about $106.5 million at the midpoint. Looking forward, I would like to see SoFi build up their deposit base. That's definitely an area of focus of the bank right now. That's one of their shortcomings that I think the market is discounting in its valuation. With banks, generally speaking, you want most of your loans to come from deposits. If someone deposits money, you're generally paying them, right now, 1 to 2% interest on those deposits in SoFi's case, and you're charging 6 or 7% interest on a loan. If SoFi has to go out and borrow that money on the secondary market, which is what they're doing for most of their deposits, it's going to cost them a lot more than the 1 to 2% they would pay on a deposit. A deposit base is your low cost source of capital for a bank. Right now, SoFi has about $8.2 billion worth of loans on its balance sheet and only has a deposit base of about $2.7 billion. Now, that's expanding rapidly, and profitability will come very quickly if that deposit base rises faster than the loan portfolio. but I would like to see that accelerate in the quarters ahead. That's something I'm going to be looking at. So thank you for tuning in. That was a quick recap of SoFi's earnings. This is a stock that I am very bullish on. I own quite a bit of it in my own accounts, and I will be watching it in the quarters to come. And I can't wait to share future updates with you. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 250%. So go to fool.com/Frankel to get your 10 stock picks right now.